How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update for Australian dollar versus Japanese yen. Welcome to February. This is what we're going to be tracking for the entire month in February. Our primary goal is to focus on AJ mainly, and we'll also use other intermarket analysis to help us understand where this market is most likely going to go within the next 20 days. As always, I use my IPTA look-back data range at the first official trading day of the month. So we're coming here on February 1st. We're counting back 20 bars, another 20 bars, and another 20 bars. So our increment of 3, totaling out to a 60-day look-back via daily time frame. We also have some information on the right here. So we have the interest rates for both countries. So we have the Reserve Bank of Australia. Their rate is 4.35. Then we got the BOJ, the Bank of Japan. Their interest rate is a negative 0.1. So we have a strong first this week. We like that. The reason we like strong first this week because the market is most likely to be volatile to move in a direction or more primed to really move through the market, whether that's up or down and trend. When you have two strong currencies, meaning you have two central banks that come together and they have a strong interest rate, they tend to have more difficulty start ranging. They tend to be going in consolidation a lot more versus a strong versus weak. So we have the interest rate differential that's strong here. Nobody really wants Japanese yen. Almost literally nobody would want to convert their current fiat currency for Japanese yen. Until they change their rates to be more competitive in the fiat world, then we'll probably see people get back into yen. But right now, they've dug themselves into a hole. Since 2016, they had a negative policy. So that's not good. All the other central banks have been raising their interest rates. So if you look at all the yen crosses in general within the last couple of years, let's say 2016, because that's when the BOJ went negative with their rates. If you look from 2016 for all the yen crosses, you'll see that yen has been depreciating while other fiat currencies against it has been appreciating though and gaining value. So we're picking pairs that are most likely ready to move, and AJ is definitely one of them. As of right now, we can see price came down and took out, let's say, as of right now, this would be the 20-day low until this candle closes. Within the last 20 days from this day, looking back, this would be the lowest low. So we can't mark that off yet. Well, we can mark it off here. I don't think price is going to get back there in the next 45 minutes when the daily candle closes. But this will be the lowest low in the last 20 days. We also ran into that 60-day old low, and we got some type of reaction around here. We also took out a lot of sell side liquidity within this run down here with this candle. We took out sell side below this swing low here, right here on January 9th. We took out a swing low here as well on this January 2nd, so the beginning of the year. So we just went below the yearly open, right? The yearly opening price, the same ideology that I use here for the opening price for the month. Anything below February's open is a discount. High probability buying scenarios would unfold here. If the market's going to be bullish, or if there's going to be any up movement, it would most likely occur strongly below here. Not to say it doesn't happen above in a premium, but the idea would be much more stronger if it was any discount below the open. So we can see we dropped below, let's mark that out, the yearly open. The open of the year drops right below it. So could we see February continue to drop below the February's opening price and continue to sell off? Possibly. And even the yearly opening price? Possibly. But if it's going to be bearish, let's just say, right, because swing lows have been broken and my bearish trend formula, I would need to see a lower swing high come into play. So price continuing dropping lower by causing a lower swing high formation to form. It would most likely form inside this SIBI here, sell side imbalance, buy side inefficiency, or just a fair value gap, and price creating a lower swing high in a premium and then selling lower. That's what some of the characteristics of a bearish month would look like. You'll see a swing high form above the monthly open and it would drop lower. If it's going to be a bullish month and it's going to be using this buy stops here, right? Sell stops here, the sell side liquidity, it's going to create a lower a swing low down here. And even if it's lower, it could be a swing low that just went to take out sell side. So it's a sell stop rate, a false break, and then it's going to go higher. But in that idea, it would also be making a swing low below the opening price for the month. So there's certain characteristics you got to see for a bullish month versus a bearish month. If you look at those months that trend in one direction, pick out some of the characteristics you can see within all bearish months or all bullish months. They have similar characteristics as you start to study this naturally. No indicators. So far, I need more data. So I wouldn't jump into any trade right now. I would need more data. I need more confirmation. But we can write down so far that a swing low or multiple swing lows was broken. That's what we can talk about right now. But what we need to see is there going to be a lower swing high that forms? Because when swing lows are broken, that equals bearish momentum. That's how I like to pair it. Swing low broken is potentially market makers stepping into the market and changing the trend or the direction or momentum of the market, unless it's a false break. Don't get confused by saying that you said it's going to be bearish. I'm telling you that it's potentially going to be bearish momentum. We need more confirmation. Sometimes that confirmation comes in very quick. Sometimes it might take a week or two, but we're being patient because we want that confirmation. We want to put as many odds on our side as the trader. We don't have large funds to trade to hold in deep drawdowns like these other large hedge funds or these large funds or commercial speculators or private investors. They may have larger funds to hold in certain movements. We want to be able to minimize the risk as much as possible. What is the easiest thing we can potentially gather with the current data? So lower swing high needs to form, unless this is a false break. On sell side, that's what's occurring right now. So that's all I'm reading based on the chart. If we look at this market as well from high to low, so let's say looking back the last 60 bars, we can see, measure this range that we're in. We have a premium versus discount. So we had to draw this out like this. And then we'll copy this. Not perfect, but it gets the illustration done. We're in a premium. Well, we were in a premium. We are in a premium right now. But price went down into a discount. So it went below fair value of this range high to low. Now I'm including the wicks because I want the entire range. Price dropped down below, and there could be buying that's occurring below inside this range high to low. So these are other things you can place on the chart to give you an idea, because we know ranges have a premium side and a discount side, and price is just trading within this range back and forth. Eventually it's going to need to get outside of this range, get external, outside, above these highs here, or below these lows down here. It's going to pick a side to start trending. And that's what we're trying to accomplish here in the next 20 days. And we could either be looking for day trades in a certain direction, a particular direction, once we figure out the trend, or we could be looking for very niched ideas and finding scalping opportunities around sensitive levels. Or we're looking for a swing trade or position trade. We're trying to find a possible entry where we can hold within the next 20 bars to potentially have a compounding trade, instead of having to go in every single day and take up a lot more of your time as a day trader to go into those kill zones, London, New York, or even potentially Asian. We can eliminate all that time and just look for a position where we can hold and potentially think that this currency is going to gain value within the next 20 days, or this currency is going to lose value within the next 20 days. So that's all I have right now. Welcome to February. We'll be tracking this the entire way. Oh, before I go, we can actually add other things. Every time I think I'm done, I'm not done. This is probably going to be the longest daily update video. Normally the first ones of the month. So as the year goes on, normally the very first episode is going to be the longest episode. I wanted to talk about the seasonality. So right now we got the seasonality as well. So Australian dollar for February in its recent data for 2024, it's supposed to be bullish. Doesn't mean it has to come to fruition. Japanese yen is bearish. So I like that setup. We got the interest rates already a huge gap between them. And then we also have the seasonals lining up as well. But then we have the dollar index that's bullish. And we know Australian dollar is inverse to DXY. So this could be something that can impact the way Australian dollar moves or impacts this pair in itself in general. So just something to keep in mind here as well. We do want to see all the yen crosses over time move up. So UJ, AJ, GJ, EJ, CJ, that's CAD versus Japanese yen. Another CJ would be Swiss versus Japanese yen. We want to see those trend higher overall because they're all against the yen. But they do have an interesting relationship with the dollar as well. That's something we have to consider. We also would take a look at the yen just to mark it off because it is important. Looking at the Japanese yen futures. So we saw how this bullish trend unfolded here. Quick. Swing high broken, higher swing low, the market starts to trend. So you start finding trending legs. But right now we've been in a bearish trend so far for Japanese yen. We noticed that. Dollar's been going up and dollar's inverse the yen, and dollar's been going up and yen's been dropping. You can see how a swing low is broken, 1, 2, 3. And then price later on creates a lower swing high. So that's a confirmation that that bearish momentum is confirmed. That's what we would want to see happen on AJ if it's going to continue that pattern, because it did that large candle down. Let's just split it up real quick so you can see it side by side. So there's multiple swing lows here being broken. Swing low here, swing low here, even on this day, the start of the month, swing low, and this swing low down here. And if it's going to continue that pattern, breaking a swing low like this, like how yen did back in December, you see how there's a lower swing high to confirm this trend lower. That could be a potential scenario here. That would mean if this is going to drop, that means Japanese yen is gaining strength. And I like that right now, currently, even though we're in a bearish trend, we did break a swing high here. Broke a swing high while AJ broke a swing low. So you can see that inverse correlation. See how this is going up positively and this is going down negatively because Japanese yen is gaining strength. So Australian dollar most likely will be getting weaker in this case scenario. But in trending environments like this, we'll see at times when price does follow its code, break a low, one breaks a low, the other one breaks a high, it can often be signs that the market is still going to continue trending in that direction that it already established. So it could still be following a bearish trend. This can be a false break as well. This could be a false break. Question mark. We don't know for sure, but it's a potential false break. If it's not a false break to the upside and price is going to come lower, it's not going to break swing lows like this here, 1, 2, 3, here, and even that one. It wouldn't want to break these swing lows down here. It would want to protect it and go higher and continue net longs and show you what the market makers have installed. These are clean lows, but the fact that price failed to break a low here could be signs that it's going to continue going higher. That would mean AJ would potentially be breaking this swing low to create a continuation pattern where they lower swing high lower. So that's a scenario using an intermarket analysis. So I'm not just looking at AJ by itself. I'm also looking at the yen futures. And the reason is because the base currency is Australian dollar and the quoted currency is Japanese yen. So we have to take a look at what the quoted currency is doing in itself. And that's what we're doing here. Before we end, let me just think, is there anything else I can say before we start getting into these short bursts episodes, because the daily tracking is not meant to be a 20-minute video or a 15-minute video as we just hit the marker. It's meant to be a very short, concise day-to-day price action. Very simplistic ideas, not over analyzing it, keeping to fundamentals. Let me think. We talked about the look back. We talked about seasonal. We talked about the interest differential between the banks and the countries. We talked about what we currently see in price action right now. We marked off a simple PD array. Yeah. If it is going to be bearish, let's just say as well, I would see a scenario like this as well. So price comes up and takes out the 20-day high and then goes short as well. So that's a scenario. So we just have some ideas. If it's going to go lower, something along the lines like this too can unfold. We fail to break the 20-day high, or we hit the 40-day high, the old look back high here, and then we react off of that as well. So there's many different scenarios you can see here. I'm not trying to predict every single one, but it's good to have an idea of what you are trying to speculate going forward. It's all speculation. I could be wrong, but it's okay to be wrong, because we know if we're wrong on our trend direction, we just figure out the other scenario that's counter to what's going on. And even then, so sometimes when we go back and flip sides, so let's say the market is bearish and I'm able to find that bearish trend, but then it flips back bullish. We have to find a way to go back on the bullish side and play both sides, because we're trading FX. I don't want to be solely a trader that is based on buying only, or only looking for sell setups only. You have to have both sides. So this is it. Looking forward to February with you guys. Peace.